All right. Howdy, and welcome to another UrbanGate monthly investor update. Brandon, how you doing?
I'm doing great. How are you, Will?
I'm doing awesome. So we're switching it up this month. We're having Brandon highlight two deals that we funded in the month of May. So Brandon, I'll let you take it from here.
Awesome. I am on the hot seat. So we have two great deals we funded that we want to highlight. The first one is in Clarksville, Tennessee. So we love this deal for several reasons. One, it was a great borrower. Two, we love our leverage point. And three, we always like backup plans upon backup plans. So if we had to take this deal back, we could throw it on the market and sell it as is. Or if that didn't work, an absolutely worst case is we could keep it as a rental property. So we love that. The second deal, also just a stellar borrower. That's really important to us right now. We want to be lending to people who are rock stars, who know how to renovate. We're noticing that houses that are coming on the market that have really high quality renovations are selling still very well. And this borrower knows how to do that. So we love the leverage point on this deal, and we love the borrower. So those are just a couple great deals that we have funded. Will fill us in a little bit on our metrics.
Awesome. Yeah. So let me stop sharing here. Cool. So yeah, those are two great deals that we funded in the month of May. Overall in May, we did 6 total loans totaling $1.7 million. So May was a very active month for us. Our average loan to after repair value in the month of May was 67%. I think it's worth noting the last 2 months were 61%. So over the last 90 days, we probably had an average loan to after repair value in the mid 60s. So that's a good leverage position. We also had 6 loans pay off in the month of May, totaling $1.2 million. So we're busy on the payoff side as well as the funding side. And then currently in the fund, we have $2.945 million, so $2,945,000. And our current monthly utilization rate is 89%. So 89% of the capital we have in the fund is lent out. Our target utilization rate is 87. So we're right above that, which is actually perfect. So, and then also in the month of May, we paid about $38,000 to investors. So May was a busy but very good month for us.
That's awesome. And so we're gonna have Will be our expert this month. And Will, there's a lot of uncertainty in the market. People are concerned about real estate values going down. So what are we doing as a fund to protect our investors' capital?
Yeah, so this has really been front of mind for me of making sure we are growing, but growing very responsibly. And, I come from an underwriting background, and Brandon's got his experience flipping. So we've really put a lot of effort into making sure our underwriting is very, very high quality. And we're doing that. I love the phrase of great people, good properties. And so we've really honed in on that, on making sure that we're working with great borrowers and really good properties. A couple metrics that we are implementing to really improve and understand the risk profile we're taking is a loan to as is value. So understanding, okay, what's the property worth as is today? Not necessarily what they're buying it for, but what do we think the market value is, and what is our loan in comparison to that? So that's a metric we are keeping a good track of. Also, just being very diligent on understanding the liquidity of the borrowers. So great people, but also understanding their liquid position. Obviously tracking our loan to ARV. So not being too highly leveraged on an ARV position. And additionally tracking our loan to cost. So not being too highly leveraged on the cost side as well. So really dialing in our leverage position, understanding the liquidity of the borrowers, and just making sure it's good borrowers, good property, good location. And lastly, this is just kind of a fun one for me since I'm a debt guy, is we've implemented a debt yield. So understanding the debt yield on the property as well, which means if we do have to foreclose, assuming we have to rent it out as is, what can it rent for? And then what can the yield on that property produce if we have to take it and manage it. So we understand worst case scenario, what's our return look like? So that feels like a long-winded answer, but those are metrics and really things we're dialing in just to make sure we're being very diligent with the underwriting.
Yeah, I think that's great. I think a lot of funds might show, return on capital, and, priority for us is return of capital. So we want to make sure your money is safe. So thanks for sharing that, Will, and thanks everybody for tuning in.
Awesome. Thanks, guys. We'll chat soon.